How is it going, traders? Welcome back to my screen. My name is Best Man Depre Kelsey Makri. If you're joining us for the first time, you're welcome to Traders Advocate, a channel built for struggling traders. Today, I'll be talking about the US30. Before I start talking about this, I'll start breaking the market down. I'll start looking at future projection for US30. You know what to do. Hit the subscribe button, smash the bell notification so you don't miss out on our subsequent videos. Once again, my name is Bestman Depre Kelsey Amakri. I'm a swing trader. I love trading and also a fund manager. All right, so today we're talking about the US30 and the S&P 500. So let's break this pair down. US30, we anticipated a pullback at least into this level before a continuation to the upside. If you've been following this channel very religiously, you will notice once we came here, we anticipated a reversal to the downside. We identified this area to be an area of concern, not necessarily an area where price will come in and reverse, but we anticipated this area. We suspected this area that price can come here and reverse. We didn't know for a sure that price will come here and reverse, but we anticipated this area as area of concern, like washout area. Look, we can come here and we can start reversing. And what happened? Pretty much run into this level and we are reversing all the way to the upside. We'll talk about that. We'll talk about that shortly. But how did we anticipate it? How did we know for a fact that a reversal to the downside was very imminent? And how did we know that this area have the potentiality of reversing price to the upside? Okay, so if you look at the trend if you look at the trend from a big picture perspective, you realize this is a bullish trend and the market moves in waves. Okay, I'm going to go to the monthly time so we'll have a clear understanding of what I'm talking about. So for every milestone achieved, investors will close position as profit. I think that again, for every milestone achieved, investors will close position as profits. You can see we have this beautiful uptrend moving to the upside. Once we came into 28,000 basic points, we pull back. We had a reversal to the downside before actually pulling back up again. Once we came into $35,000 basic points, there was a reversal to the downside. Best believe on the lower time frame, you could find a reversal sharp pattern to the downside. Okay, so once we start pulling back up again, the same thing happened here. So once we came into here, we knew 50,000 basic points, we knew a reversal to the downside was very imminent. But this is the area we anticipated price to reverse to, at least this trend line, before actually pushing back to the upside. How did we know that 50,000 basic points was the area that price will come into and reverse? If I bring out my Fibonacci expansion level from swing low to swing high, we realize we came into the 100%. Let me zoom in properly so you get to see this. You realize we came into the 100% Fibonacci expansion level, which is a profit-taking level by investors. Mind you, I've said it before that for every milestone achieved, investors will close position as profit. So once we came in here, we knew a reversal to the downside was very imminent. Now the reversal is not like the market wants to reverse from being an uptrend to now being a downtrend. The reversal is as a result of the market, as a result of position being closed as profit. Hence, we reversed at least to the nearest support. This was the area we anticipated the reversal from. We coming into this area before actually pushing all the way to the upside. Okay, cool. Pardon me, let me take out the expansion level. I pipe myself a cleaner shot. Cool. So once we came in here, it was on the daily time frame. You can actually see we form what they call an head and shoulder pattern. This was the left shoulder, this was the head, this was the right shoulder. Head and shoulder pattern are bearish, reverse or sharp pattern. They have the probability of reversing a trend from being bullish to now being bearish. This area marked with the purple bar is the neckline of the head and shoulder pattern. So mind you, because we saw this head and shoulder pattern, our mindset has been wired the reversal to the downside. But the reversal is not meant to reverse. I won't say meant. We're not meant to sleep too long on the reversal because we understand or understood clearly that the reversal is as a result of profit taking. So we knew for a fact if we are selling, we should be selling with caution. Okay, so how did we jump on this? It was a simple a breakout of the neckline, a pullback for a retest. We drew our counter trend line. Once we broke out from the counter trend line, it was a breakout, a fake out. We broke out and we faked out to induce some dumb traders who don't know how to trade properly. And what happened? Once we start pointing back down, immediately the close of this candle, I started selling. And what happened? We came very swiftly into this level. Now, this level was an area of concern for us. This was not the level we anticipating price to start reversing from. We anticipated this level to be a level of concern. We didn't know for a fact price would come here and start reversing, but what we did know at the time was this level have the potentiality of reversing price. So once we tapped here, I pushed my stop loss. I closed out my first position entirely as profit. On my second position, I pushed my stop loss below where I bought from. So I bought somewhere around the close of this candle, right? Once we got here, I closed out my first position entirely as profit. On my second trade, I now push my stop loss from somewhere around there to this high. And what happened? Pretty much from a double bottom, price has now come back to smash my stop loss on the second trade. So I've made money from the first trade. On the second trade, I've also made a little bit of profit. Price has now come to smash my stop loss. Why was I anticipating price to at least pull back for a retest of here before actually continuing with the trend? If I bring out my Fibonacci retracement level from swing low to swing high, you realize this area I marked came rightly into the 61.8 Fibonacci level, and this other area also came into the 50% Fibonacci level. The Fibonacci retracement level is a tool that mark out potential areas of price reversal, and the most potent areas are the 50% Fibonacci level and the 61.8 Fibonacci level. So I anticipated if we break out from here, at least one of this level will be the reversal level. So we start pushing all the way to the upside, but that didn't happen. We came here and we stood firm, and we are currently pointing to the upside. I'm guessing this is as a result of all the political tension or crisis that is going on in the Middle East. It's very much possible. So we kind of reverse to the upside. So what's next for this guy? How is there any trade opportunity? How can we jump in? Let's see if we can identify trade opportunity. I know most of you will be like, okay, what's next for the US30? So the US30 was pretty much broken above this level. We are currently pointing up. I won't be surprised if we come into this level, although I won't advise you buy at the push phase. This market is just pumping up, just moving up. We don't buy at the push phase. We want the market to come and settle at a level so we can actually buy. This is the push. You can put your money here, you can buy somewhere here. The market starts retracing all the way to the downside. It's very much possible. Market starts retracing all the way to the downside. But if you're an aggressive trader, maybe price will actually pull back into this level before actually continuing with the bullish trend. Especially if I draw my trend line, you will notice, pardon me, maybe we might actually pull back for a retest of here, a continuation to the upside with a call. I believe we might actually come into this level to do a test of this level. So if price pulls back here, you see a bullish candlestick bounce from here. Once price comes in here, you want to lock in all your profit, because you can come here and start reversing all the way to the downside again. It's possible, but I won't be buying. I won't be buying anything around this level. I won't be buying. Why? So I'm not the guy that buys within a high. I don't like to buy or sell when I see the market, especially when I see the market trading between one high and one low. Okay, I'm going to say that clearly why I don't do that. If you look at it from the weekly, which you are trading between this high and this low, okay, and at least we can pull back here. Market can come here and form a double top, and we can start reversing all the way to the downside. That's very possible. We can start pushing all the way here to form a double top. This now becomes a first top. We now form a second top. We can start reversing all the way to the downside. If that should occur, then I'll be more I'll be looking for selling position to the downside. I'll be more confident in looking for selling position to the downside. It means we can start reversing at least to do a retest of here before we start blowing all the way to the upside. So allow the market to decide what it wants to do. If we want to break out from here and start pushing up, the market will tell us. We will always come back here, reanalyze the market, and see how we can actually come in for a buying position. But if we come here and we start seeing some bearish engulfing candle bounce at this level, we'll come out here and also reanalyze the market and how we can start looking for selling position to the downside. Then we'll have all this space to work with. Okay, I'm not going to go to the 1 hour time frame, the 15 minutes, the 10 minutes to look out for trade or look for trade. Those time frames are not concrete enough. Like I stated earlier on, I'm a swing trader. I love doing my analysis from the higher time frame. Decisions made on the higher time frame have the higher probability of playing out compared to decisions made on the 5 minutes, 2 minutes, 1 hour, 30 minutes. 30. No. That's not how to. That's the time frame intraday gamblers come to do their thing. All right. So sit on your hands, allow the market. Basically, what I'm saying is sit on your hands, allow the market to decide what it wants to do. If we want to break to the upside, the market will tell us. If it wants to continue going down, it will tell us. But I'm feeling, I'm projecting maybe we might actually come here to form a second top compared to this one, and a reversal to the downside might actually occur. If that should happen, don't worry, we'll come here, realize the market, and see how we can actually come in for a selling position. But for now, there are no buyers. We have no buyers on S&P 500 unless you are an aggressive trader. Wait for price to come into this level, wait for a bounce of this level, either a 4-hour bullish candlestick bounce, a continuation to the upside will occur. But for me, the pip count from here to me is too small. I'm not interested. I love to trade a certain amount of pip counts, not 30, not 100 pips, 30 pips, 200 pips. No, the pip count for me is too small. I love space. Okay, I love space. That's it for the US30. Let's look at the S&P 500.